Pretty soon I'm gonna have to invest in a better green screen thingy. What I used to do for now though. All right, give a second for everybody to come in before we get started. Good evening, good evening. Back at it again, about to get into this 709 instructions. We was able to get through part A, so we picking up. Through the schedule A, excuse me. So we picking up. Let me get this water right now. Picking up on schedule B. Schedule B. So picking up on the schedule B. Bear with me real quick. I got to also do the other social media platform. So I gotta put on this. I gotta put this TikTok on. Give me a second. I'm about to start the TikTok and then start the reading. If I can just figure out this phone, which is not my phone. So I have no idea where anything is on it. But okay, let's just try this. Man. Come on. Just I gotta change this. Come on. Whose phone is this? That's my camera turned around. Shucks. I don't know. I hope this is right. Oh, okay. She got this thing on here. That's what it is. I think we live on the TikTok. I hope we are. How the heck do you turn the camera around? Which one of these? I really don't be knowing none of this stuff, y'all. Flip camera. All right, there go my big head. All right, figuring it out. Now let's get this stupid effect back. Picture. All right, welcome in TikTok world. We are back at it. Reading these 709 instructions. Hope it's coming through clearly. Y'all can hear me. I don't know why it's so crazy blurry. I think that's just this camera. It's a different phone. So, all right. All right. Welcome in, everybody. We're about to get down to business. Well, like I said before, fresh off of work, tired. But as I said before, I'm going to read this because I said I would. So, let me give the disclaimer. Which you should know by now, I don't give advice. Don't ask me what color goes with what. I don't give clothing advice. I don't give fashion advice. All right, don't ask me about what to do with your taxes. I don't give tax advice. I don't give financial advice. If you're in the jam, I ain't giving you legal advice because I do not give advice at all. All right, all we doing over here is just reading. And if something we reading makes us ask a question, that's a bonus because now we can go seek out the answer. All right, ain't too many things in this world that you can't know by just picking up a book. All right, it ain't no magic to it. Ain't no secret to it. I say this 1,000 times. You're not going to get rich quick, but we can learn and then help one another get better. We can do that. But it starts with this reading right here. So this is what we're going to do. We're going to read the 709 instructions. We're picking up at Schedule B. Schedule B. Gifts from prior periods. If you did not file gift tax returns for previous periods, check the No box on page 1 of Form 709, line 18A of Part 1, General Information. If you file gift tax returns for previous periods, check the Yes box on line 18 and complete Schedule B by listing the years or quarters in chronological order as described below. If you need more space, attach a separate sheet using the same format as Schedule B. Caution: complete Schedule A before beginning Schedule B. Column A. If you file returns for gifts made before 1971 or after 1981, show the calendar years in column A. If you file returns for gifts made after 1970, and before 1982 show the calendar quarters. Column B. In column B, identify the IRS office where you filed the returns. If you have changed your name, be sure to list any other names under which the returns were filed. If there was any other variation in names under which you filed, such as the use of a full given name instead of initials, please explain. Column C. To determine the amount of applicable credit, formerly unified credit, used for gifts made after 1976, use the worksheet for Schedule B. Column C. Credit allowable for prior periods. Unless your prior gifts total $500,000 or less. Okay. Prior gifts totaling $500,000 or less. In column C, enter the amount of applicable credit actually applied in the prior period. Prior gifts totaling over $500,000. C, redetermining the applicable credit later. Column D. In column D, enter the amount of specific exemption claimed for gifts made in periods ending before January 1st, 1977. Column E. In column E, show the correct amount, the amount finally determined, of the taxable gifts for each earlier period. See Regulations 25.2504-2 for rules regarding the final determination of the value of a gift. Note, amounts shown in column E should reflect all taxable gifts, even if no gift tax was paid due to the applicable formerly unified credit. Redetermining the applicable credit. To redetermine the applicable credit for prior gifts in excess of $500,000, use the worksheet for Schedule B, column C, credit allowable for prior periods. All right, now I was questioning whether or not I was going to. I don't think I can actually read you all this because this. Well, I guess I can read it. Yeah. All right, so this is a worksheet. I was trying to figure out how I can make it for you to make it make sense. It's all data columns. So I can't like read the column. Like I could read the columns, but it wouldn't make sense without looking at it. So basically, let me think for a second. How can I read all this? All right. So, all right. I'm not going to read you the worksheet only because the worksheets themselves are for computation, right? So what you would do is you would take your if I was filling this out, because I don't give nobody else advice, but if I'm filling this out, I would use the worksheet for calculating my specific situation for that year. So every year is not going to be the same taxable situation. So I may gift one year, may not gift another year. So the worksheet to me, it looks like something that I can use to calculate or computate my GST. for that year. It gives me values that of credit that I can apply to that year. And then that's how I would basically calculate for whatever year I'm in. All right, so let me just give you an example. In 1977, for at that time they were using periods, right? It says in 1977 quarters 1 and 2, and then it says 1977 quarters 3 and 4, and it gives you the amount of the exclusion, so which is the credit. For quarters 1 and 2, the exclusion amount was $30,000. For quarters 3 and 4, the exclusion amount was $120,667. Well, let me say that again. That was terrible. It was $120,667. That was the exclusion amount. Today, if I jump down to 2025, the exclusion amount, now we do it now, it's past 1977. So in 1978, they started with just a base amount and not by quarters. They did it by the whole year. So for example, 1978 was the exclusion amount for the year was $134,000. The credit amount was $34,000. So when we jump down to 2025, the year that just went out, the exclusion amount is $13,990,000. Why did I say that wrong again? Sorry, guys, I'm tired. Let me say this number again. For 2025, the amount is $13,990,000. The credit amount is $5,541,800. All right. So, sorry, I'm moving all around like that. That picture looked crazy. So yeah, that's basically what that calculation would be. It's basically how much I can exclude, how much of my gift I can exclude for that year, was the total. So from there, I'm just going to jump into Schedule C, because like I said, these are literally just, I'll show y'all what these are. These are just, I don't know if y'all can see these on the TikTok. I think I gotta change the camera up. Let me put it for the YouTube. If you're studious, you'll go to the YouTube after this live is done. But it's like literal, y'all can't even see it. I ain't even gonna try, so forget about it. It's charts. It's a chart, and it's a way for you to basically see for whatever tax year you want, what your exclusion value would be. So I'm just gonna go ahead and jump into Schedule C. That was the end of Schedule D. All right. I ain't get no snacky snack, but I got to keep on keeping on. All right. Where are we at? All right. Schedule C. Schedule C. Deceased spousal unused exclusion, DSUE, amount and restored exclusion amount. Welcome in if you just joined. Welcome in, Gen X. Who else is that? Ellie. Welcome in, Craig. Welcome in. I can't say your name. I'm just gonna say hi to you instead. How about that? Welcome in, everybody. All right, we're back at it. Reading the 709 instructions. Trying not to get banned on TikTok for reading. So, thank you for coming in. Boy, tired today, man. But we're doing what it do. All right. Where was I at? All right, Schedule C. Section 303 of the Tax Relief, Unemployment Insurance, Reauthorization, and Job Creation Act of 2010 authorized estates of descendants dying on or after January 1st, 2011, to elect to transfer any unused exclusion to the surviving spouse. The amount received by the surviving spouse is called the deceased spousal unused exclusion, or DSUE amount. If the executor of the descendant's estate elects transfer or portability of the DSUE amount, the surviving spouse can apply the DSUE amount received from the estate of the last deceased spouse, defined later, against any tax liability arising from subsequent lifetime gifts and transfers at death. All right, did I read that clearly enough? Because, like I said, when you read something that's interesting, it should make your brain tickle. Questions should pop up, and I'm not even reading it. I'm reading it to y'all. I'm just trying to get all the words right so y'all can understand it. But if I'm reading this to myself, what did you just say? Huh? Because it said any tax liability arising from subsequent lifetime gifts and transfers at death. Tickle. Caution. Complete Schedule A before beginning Schedule C. Note, a non-resident surviving spouse who is not a citizen of the United States may not take into account the DSUE amount of a deceased spouse, except to the extent allowed by treaty with the surviving spouse's country of citizenship. Last deceased spouse limitation. The last deceased spouse is the most recently deceased person who has married to the surviving spouse. Let me read that again, excuse me. The last deceased spouse is the most recently deceased person who was married to the surviving spouse at the time of that person's death. The identity of the last deceased spouse is determined as of the day a taxable gift is made and is not impacted by whether the descendant's estate elected portability or whether the last deceased spouse had any DSUE amount available. Remarriage also does not affect the designation of the last deceased spouse and does not prevent the surviving spouse from applying the DSUE amount to taxable transfers. When a taxable gift is made, the DSUE amount received from the last deceased spouse is applied before the surviving spouse's basic exclusion amount. I like that. A surviving spouse who has more than one predeceased spouse is not precluded from using the DSUE amount of each spouse in succession. Well, dang. Okay. A surviving spouse may not use the sum of DSUE amounts from multiple predeceased spouses at one time, nor may the DSUE amount of a predeceased spouse be applied after the death of a subsequent spouse. Somebody was thinking, somebody was thinking when they wrote this one up. Don't be out here like, oh, I got some gift tax credits. My spouse just died. And another one. Another one died. I got some more. No, that's not how it works. Ooh. Listen, when y'all read these things, I laugh when I read this because remember this. Anytime you read a law, no matter how crazy that law sounds, anytime you read a rule that say don't do this thing, somebody did that thing. For sure. The reason why that rule exists is because somebody tried it and they had to make a rule. So, man, just keep that in mind when you're reading. When a surviving spouse applies the DSUE amount to a lifetime gift, the IRS may examine any return of a predeceased spouse whose executor elected portability to verify the allowable DSUE amount. The DSUE may be adjusted or eliminated as a result of the examination. However, the IRS may make an assessment of an additional tax on the return if a predeceased spouse only within the applicable limitations period under Section 6501. That didn't sound right. I got to read that again. Sorry, I'm reading to myself first so I can get it. What? All right. The DSUE may be adjusted or eliminated as the result of the examination. However, the IRS may make an assessment of an additional tax on the return of a predeceased spouse only within the applicable limitations period under Section 6501. Restored exclusion amount. Prior to the decision of the Supreme Court in the United States versus Windsor, 570 U.S. 744, 133, I don't know if that's, I'm going to say, Circuit Court. Yep. Circuit Court? No. How you spell it? Yes, Circuit Court. All right. Sorry. Let me read this again, y'all. Prior to the decision of Supreme Court in the United States, the decision of the Supreme Court in the United States versus Windsor, 570 U.S. 744, 133, Circuit Court 2675 in 2013. The Defense of Marriage Act, DOMA, DOMA, Public Law 104-199, 110th Statute 2419, required that the marriages of couples of the same sex should not be treated as being married for federal purposes. As a result, taxpayers in same-sex marriage were not entitled to claim a marital deduction for gifts or bequests to each other. Those taxpayers were required to use their applicable exclusion amount to defray any gift or estate imposed on the transfer. I said that wrong. Sorry, I got back up. Those taxpayers were required to use their applicable exclusion amount to defray any gift or estate tax imposed on the transfer, or were required to pay gift or estate taxes to the extent the taxpayer's exclusion previously had been exhausted. In Windsor, the Supreme Court declared that DOMA was unconstitutional. For federal tax purposes, marriages of couples of the same sex are treated the same as marriages of couples of the opposite sex. The term spouse includes an individual married to a person of the same sex. However, individuals who have entered into a registered domestic partnership, civil union, or other similar relationship that isn't considered a marriage under state law aren't considered married for federal tax purposes. Sorry, it sounds crazy because I'm reading this and I'm as I'm reading it to me and y'all at the same time because I'm like, wait, what? Wait, they did what? Hold on. All right, let me try to get out of it, pull myself out of it, and then just read it to y'all. All right, but all right, I'm just going to read that paragraph again. In Windsor, the Supreme Court declared that DOMA was unconstitutional. For federal tax purposes, marriages of couples of the same sex are treated the same as marriages of couples of the opposite sex. The term spouse includes an individual married to a person of the same sex. However, individuals who have entered into a registered domestic partnership, civil union, or other similar relationship that isn't considered a marriage under state law aren't considered married for federal tax purposes. Under a new procedure, a donor who made a transfer to the donor's same-sex spouse, which resulted in a reduction of the donor's applicable exclusion amount, can now recalculate the remaining applicable exclusion. This procedure is only available to transfers that did not qualify for the marital deduction for federal gift tax purposes at the time of the transfer, based solely on the application of DOMA. If the limitations period has expired, the donor may recalculate the remaining applicable exclusion. However, once the limitations period on assessment of tax has expired, neither the value of the transferred interest nor any position concerning a legal issue other than the existence of the marriage related to the transfer can be changed. Summarily, no credit or refund of the gift taxes paid on the donor's transfer to the donor's same-sex spouse can be given once the limitations period on claims for credit or refund has expired. Yeah. Hungry. I got over there. All right. I'm looking over here to my left, and all I got is bananas. And y'all done messed up eating bananas now. Like, you can't eat bananas no more. It's weird. Anyway, 20s. Page 20, sorry. Here we go. The first step of the procedure is to determine the amount of applicable exclusion that was expended on the taxable gift to a same-sex spouse. And in any given year, the amount of applicable exclusion expended on a taxable gift to a same-sex spouse is equal to the amount of applicable exclusion expended on all taxable gifts multiplied by the ratio of the amount of taxable gifts to the same-sex spouse over total taxable gifts. So it's a math equation. The amount of applicable exclusion expended on all taxable gifts is equal to the lesser of the available applicable exclusion or the amount of all taxable gifts. Example, in 2011, Alex made a $5 million. I'm sorry, let me read that. In 2011, Alex made $5 million of taxable gifts. Alex made a $3 million taxable gift to Pat, same-sex spouse, and a $2 million taxable gift to Max, another individual. Alex's marriage to Pat was recognized by the state where they got married, but was not recognized by the federal government. The transfer to Pat will qualify for the marital deduction if Alex's marriage to Pat was recognized by the federal government. Alex has a basic exclusion of $5 million. Alex had previously used $1 million of the applicable exclusion on other gifts in previous years. This means Alex had $4 million of an applicable exclusion available in 2011. Since Alex's available applicable exclusion, $4 million, is less than the amount of all taxable gifts for the year, $5 million, Alex expended all $4 million of the available applicable exclusion on all taxable gifts during the year. And they give you a second example. I can read this. There's an equation, but I can read this to you. Example of calculation of restored exclusion amount. On the left, you have applicable exclusion expended on all taxable gifts times taxable gifts to B over taxable gifts equals to applicable exclusion allocable to gifts to B. And that's in words, and then this is the same equation in numbers. So $4 million times $3 million over $5 million is equal to $2,400,000. In 2011, Alex expended $2,400,000 of the applicable exclusion on the taxable gift to Pat. The second step of the procedure is to repeat the first step for every year when the donor made a taxable gift to a same-sex spouse. The third step of the procedure is to add up the result for all the years. The result is the total amount of applicable exclusion expended on the same-sex spouse. This amount of applicable exclusion will be restored to the donor for use on future gifts and bequest, and is known as the restored exclusion amount. Enter this amount on line 3 of Schedule C. You know,
that's interesting.
What I want to say is that, hold on, let me finish this let me finish this. Attach a statement to Form 709 detailing the calculation of the above procedure on the first Form 709 on which you claim a restored exclusion amount. Caution: the restored exclusion amount will have to be accounted for the donor on every subsequent 709 form and Form 706 that will be filed. This means that on all future forms 709 that will be filed, the restored exclusion amount will need to be entered on Schedule C. The restored exclusion amount will be entered on line 9C of Part 2, Tax Computation on Form 706. In addition, the worksheet for Schedule B, Column C, Credit Allowable for Prior Periods, should reflect the restored exclusion amount for the period when applicable exclusion was first restored, and on every subsequent period listed on the worksheet. Add the restored exclusion amount to the total DSUE amount, if any, and enter the sum in column H. All right. No, I gotta keep going. All right. Completing Schedule C. Complete Schedule C if the donor is a surviving spouse who received a DSUE amount from one or more predeceased spouses, or if the donor is a taxpayer who made a taxable transfer to a same-sex spouse, which resulted in a reduction of the taxpayer's available applicable exclusion amount, or both. Schedule C requests information on all DSUE amounts received from the donor's last deceased spouse and any previously deceased spouses. Each line in the chart should reflect a different predeceased spouse. Attach proof of each portability election reported on Schedule C. Okay. Now let me stop and go back. The restored exclusion amount for the people listening. I want to ask y'all a question. It said, oh, yeah, the third sense of Adams. Okay, right. That's why it has to go in. Okay, so let me tell the calculation. Tax bill. Okay. Okay. All right. So my question, right? Because this is the first thing that popped in my head. I don't know about y'all. All of this computation is only for same-sex marriages. Did anybody else see that?
That's what I said. Interesting.
Did anybody else out there in the internet land, when I was reading that, did that? Okay. I mean, it's not relevant to me. I don't have a same-sex marriage. But this is what I mean when I say everybody's situation is not the same. If somebody out there telling you that you're going to take their class or whatever or do their thing, and then you're going to, I don't know, magic. Whoop-de-doo. It ain't gonna happen, yo.
It's not happen. Like, it's abracadabra.
Oh, abracadabra. Whatever.
You dumb as shit, whatever, yo. You
like,
said whoop-de-doo and started laughing.
I can't.
It's fucking abracadabra. Boom. You got it. That's why I always tell them everybody's situation is unique. Everybody's situation
ain't the same, man. And the reason why you should be going through this is to figure out what applies to you.
Mm-hmm.
That's what you should be doing this for.
And another thing I be telling them, like when we give them the wording, the verbiage to say when you're filing this stuff, I always say make it personal to you. Mm-hmm. When I do the revocation, they're denouncing them from using their shit. I say make it personal to you. Don't send off what I'm telling you to write. Why would you send the same repeated thing over and over? That would make you an AI. You wouldn't be a beating heart. Right. And that's what the whole purpose of us executing these documents is the living people, mm-hmm. not the paper people. Yeah. So it's important that you pointed that out to them, and I hope they paid attention.
We'll see. That's all I got. I mean, a couple of questions I had popped in my head, but the main thing is that, man, all of this is broken down so that I mean, I don't even know how to say this. Like, it's. I don't want to sound like political or nothing like that, but it's a lot of people complaining right now. It's a lot of negativity out there right now, and it's surrounded by, the choices that we have, or the freedoms available to us, or the privileges available to us. It's a lot of people arguing about that thing right now, about those different things, right? All I'm saying is anybody asking what is available to them? What can I do from where I am to get to where I want to be? Or is most of it just, oh, they hate black people, they hate gay people, they hate women, they hate
Latino,
they hate
small people,
is
people with
it
short
just
feet.
is it all negative? Is nothing can be done? Is it, I just don't, I can I'm reading right here. I'm not gay. I'm reading opportunity right here for somebody that this don't apply to me, but this apply to somebody out there.
And with all the fluidness out there, somebody should benefit from that.
I don't know.
That's why we keep trying to tell y'all to change the way you think. If you stop complaining and talking about what you don't have, somebody sent me an email today, and she talked about every single thing in her life that was horrible. And I'm like, you said all of that. Do you want a consultation with me? Because I want people that want to change their circumstances. If you're still repeatedly talking about the same shit, you're not ready to change anything. So, look, look. She up.
Hey, babe.
I put the light on it today.
Y'all gotta excuse me. I gotta let my baby out.
She out. Hey. Look at her. You all the way out.
Big girl.
Yeah, because look, she warm. She's joining on me. No, it's too late for her to come out now. Come on. She can come out tomorrow. Tomorrow will be a good time. Tomorrow at lunch.
All right.
Finish what you're doing.
Sorry about that. Oh man, I've been taking care of this
grand snake.
My grand snake. My son, it's my son's snake. It ain't my snake, but
that's what make it a grand snake, fool.
But she pretty much, I mean,
she our child. You can be honest.
I don't know what to call it. But what was he saying, babe? Before we just rudely interrupted ourselves.
Oh, with our baby. No, we was just talking about people changing the way they think about things, so they can move forward in life, especially with executing these things.
I know it's hard too when we scrolling, and every time you scroll, you just seeing something else negative. It does make it hard to think positively. But shit, if you got to put the phone down, then do that. I don't know what you got to do, but there is opportunity. It's not all bad. And if we being honest, if I'm just keeping it 100, there's more opportunity.
Then there is lack
of opportunity.
Mm-hmm.
It's skewed in your favor.
And they just sitting there talking about we don't.
So I don't want y'all to give up hope. Like, we can't do shit. Listen. I just read this shit like. Not only. See, it would be one thing if it said, going forward after the ruling, you're gonna get your just due. We're gonna take care of you. Going forward, you're gonna make sure that you have your amount, your full amount. But that's not what it said. It said going forward and back and forever. As long as if that's your thing, if that's what you into, yeah, we got you. What are y'all complaining about? I don't understand. It's just.
That's why I always hashtag the IRS is your friend.
I don't know.
The IRS is your friend if you know how to play nice. If you play nice and they play nice, everybody.
I don't know. I don't know, y'all. I'm not saying that I'm not at all trying to advocate like for one side or the other or whatever like that. I'm just saying, as an individual human being on planet Earth, if you happen to be spawned here, if you just happen to be spawned here,
blessings on top of blessings on top of blessings.
I would look for these opportunities that are everywhere. I would be looking for the opportunities. I would put my phone down and stop, turn the TV off, like Kendrick said. I would turn the TV off, put the phone down, and just start looking for opportunities that apply to me.
You can't look at an opportunity if you never go outside. You can't look at an opportunity if you never go outside. You can't stretch your brain and increase its power if all you're doing is looking at a device. You're not strengthening your brain's cells, right? Brain, whatever make your brain brainy. My bad, but we are trying. He's going to stop there because we got to eat dinner. And
are we
tomorrow
we got 9 more minutes. Let me finish hold on. Let me finish I got Schedule D coming up. So let me finish C. And
hurry up, Gus.
All right.
You see how late it is?
Yeah.
I have to start cooking dinner.
All right. What was that? Schedule C from the research to the C amounts previous each line should be yeah. All right. Part 1. DSUE received from last deceased spouse. In this part, include information about the DSUE amount from the donor's most recently deceased spouse, whose date of death is after December 31st, 2010. In column E, enter the total of the amount in column D that the donor has applied to gifts in previous years and is applying to gifts reported on this return. A donor may apply DSUE only to gifts made after the DSUE arose. Part 2. DSUE received from predeceased spouse or spouses. Enter information about the DSUE amount from the spouse or spouses, if any, who died prior to the donor's most recently deceased spouse, but not before January 1st, 2011. If the prior spouse's executor elected portability of the DSUE amount in column D, indicate the amount of the DSUE received from the estate of each predeceased spouse. In column E, enter the portion of the amount of the DSUE shown in column D that was applied to prior lifetime gifts or transfers. A donor may apply DSUE only to gifts made after the DSUE arose. Caution: any remaining DSUE from a predeceased spouse cannot be applied against tax arriving from lifetime gifts if that spouse is not the most recently deceased spouse on the date of the gift. This rule applies even if the last deceased spouse had no DSUE amount or made no valid portability election, or if the DSUE amount from the last deceased spouse has been fully applied to gifts in previous periods. Determining the applicable credit amount, including DSUE and the restored exclusion amount. Last paragraph. On line 1, enter the donor's basic exclusion amount for 2025. This amount is $13,990,000. Add the amounts listed in column E from parts 1 and 2 and enter the total on line 2. On line 3, enter the restored exclusion amount. On line 4, enter the total of lines 1, 2, and 3. Using the table for computing gift tax, determine the donor's applicable credit by applying the appropriate tax rate to the amount on line 4. Enter this amount on line 5 and on line 7 of part 2, tax computation. All right, so we're going to stop there. That was all of completing a Schedule C. And it seems as if though Schedule C was mainly about computing and crediting tax for a specific person. If you have that specific situation happen, whether it be the death of a spouse or if you are a same-sex couple. And that is just me reading. I don't know nothing. You heard? But we almost done though. We almost done. We only have, so if I take out these, if I take these out, we only have one more. And it's not even going to be an hour. Because the next one is a lot of tables. So then we'll finish
the tables they can read themselves. If they can't read those tables by themselves, then tough is sad for them. You just read every single thing on that instruction. You're going to do that last part, and that's it.
Well, where's 21? Oh no, okay, no. There's more. There's more here. They give you the tables for computation, but you're right. I can't read the table.
Listen,
but I can read you in between, and I can read you all the lines all the way down to your signature line, which is that's what we'll be closing out. So we'll probably do this one more time. We're here in part 5, and there probably will be a part 6,
and that's the end of it. And anything else they have to figure out on their own. Now we did enough. This is enough goodwill. Close out for tonight. Y'all have a good night.
You sound tired and angry.
I'm tired of shit. Like I'm working all day and I'm doing this too. Like I'm tired. So close it out, please. Y'all have a good night. I hope y'all learned something.
All right. Let's see how we do this thing here. All right. We didn't have that many people.
Leave. Just say leave. Don't worry about that. Just say leave.
Okay.